Hello and welcome to another update video about FETCH.AI. FET shows a reaction today to the CPI data, which was, well, positive, not really positive, but let's say inflation cooled down a little bit. But the market saw that as quite positive. Apparently the crypto market sees a bit of a rally today. But from an analysis point of view, first of all, there is nothing surprising here. And also, there's no change. Okay, so there is no breakout. We need clear signals. At the moment, the market is just moving in a range. The range was defined already in the previous video. I highlighted to you that as long as the market is holding above this 1st of May low and below the 6th of May high, which is the next swing high, there isn't really anything that's groundbreaking. Okay. We talked about this Elliott wave triangle, which was due a E-wave bounce. Yeah, this was due an E-wave bounce, and that is what could be unfolding right now. And in this scenario, in which we are tracking the following count, WXY, this here is a B wave, and the B wave would be within the Y wave. So WXY is the correction, and a Y wave is an A, B, C structure, and an B-wave triangle, even though rare in the current cycle, is currently what I'm tracking here in this scenario, which would be short-term bearish. It just means it allows for another move down into the region between 127 and 157. It doesn't mean it has to happen. This is not prediction it will go down. It basically means just be a bit on the side of caution, but a break below $1.87 would confirm that the triangle is breaking to the downside. Okay. And here we have an A, B, C, D, E. So that E wave was still due. So therefore this rally is not surprising from an analysis point of view. It actually looks better like this and then going down than going down straight away. That's pretty good. And this E-wave could extend technically all the way up to the last high at around about 252. But please pay attention to that trend line, which is located around 244. Could act as resistance. Now, I mentioned in previous videos that, yep, we've dipped into our trend reversal area, into our support region. And in the last video, I even talked about the potential of this chart to rally like 200%. So basically, that means it could triple its value, which, if you watch the previous video, is quite clear because we dipped into the, let's say, $2 range, to the $2 level. And the next upside target points towards around about $6 or even higher. Okay, so I try to keep it conservative. But the idea was just somewhere from here, you know, in that support zone, that rally could start. But we're also tracking the micro patterns to understand when certain scenarios get more likely and which pathway we are on at the moment, which can change, you know, especially on volatile days like that. But we have two scenarios and both are unaffected at the moment because both movements can be explained with, or the rally today can be explained with those two scenarios. In the yellow count, I can put in micro count for the yellow scenario on the chart. Yellow count means we're dealing with an ending diagonal. That's a direct pathway to the upside, okay? And the reaction to the support region was quite substantial, but not impulsive. So the wave one was a 3-wave move. Therefore, the third wave would need to be a 3-wave move as well, ABC. Okay, I'm labeling that right now. Let me just change the color, change the wave degree. It just indicates this is definitely a reasonable assumption that we could already be in that move to the upside directly. Therefore, however, everybody who wanted to get positioned ideally got positioned in the orange support zone, and anybody who used that box is now in profit anyway. And all you need to do is risk manage depending on how you trade this. But I can tell you I have no confirmed low in place, but I would track the yellow count with priorities, or I would say that this is the leading count if there's a break above 252. So that should give you all the levels, and generally zoomed out, yeah, the $1.27 level is the key level against which I focus on higher. So I'm bullish. I don't care so much about if we get one more low or not. That's possible. Okay, it just means that don't get too overexcited yet. Don't vibrate out of your chairs, even though this chart that generally acknowledges that a low could be in, but I need to see at least an upside breakout. At the moment, we're just moving in a range, and it's not that we didn't have these rallies before, right? And they didn't go anywhere. So it would be nice to follow through to the upside, but it's too early to confirm. Where should the third wave in yellow take us if we've really bottomed? And again, the make or break point here for the yellow count is the 1st of May low. Well, it should take us ideally to the 138.2 extension minimum, well, first ideal target, right, or higher. So here I'm talking about $3.60 plus basically. So I highlight that on the chart as yellow scenario first ideal target. That's sort of what I'm watching. Yeah. And overall, and this here is our main support area, right, for this fourth wave. So that means below $1.27, I can't really have a clearly bullish outlook anymore. That's my update about Fetch. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.